High tax versus low tax states. Where should you buy a home? Taxes can make or break your financial future when buying a home. Two identical $400,000 houses, one in a high tax state, one in a low tax state, can have total costs that differ by $20,000, $30,000, or even $50,000 per year when you factor in income taxes, property taxes, and sales taxes. Today, we're breaking down the real numbers. We'll compare high-tax states versus low-tax states, show you exactly how much more or less you'll pay, and most importantly, help you understand where your money goes further. We'll look at state income taxes, property taxes, sales taxes, and the total tax burden. Then we'll compare specific states head-to-head so you can see the real difference. Whether you're relocating, investing, or just buying your first home, understanding the tax equation is critical. Let's follow the money and find out where you should buy. Understanding the tax landscape. First, let's understand what taxes you're actually paying. The three major taxes that affect homeowners. 1. State income tax. This is the tax on your earnings, salary, business income, investment income, retirement income. It varies dramatically by state. No income tax states, 9 total: Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. Low income tax states: North Carolina at 4.75%, Arizona at 2.5 to 4.5%, and many others with rates under 6%. High income tax states: California at up to 13.3%, New York at up to 10.9%, New Jersey at up to 10.75%, and Hawaii at up to 11%. Why this matters? A person earning $200,000 in California pays approximately $16,000 to $18,000 in state income tax. The same person in Texas or Florida, $0. That's $16,000 to $18,000 per year that could go towards your mortgage, retirement, or quality of life instead of state taxes. 2. Property tax. This is the annual tax on your home's assessed value. You pay this every year you own the home, and it can increase over time. Property tax rates vary wildly. Low property tax states: Hawaii at 0.28% average, Alabama at 0.41% average, Louisiana at 0.55% average, and Wyoming at 0.61% average. Moderate property tax states: Florida at 0.8 to 1% average, North Carolina at 0.8 to 0.9% average, and Georgia at 0.9% average. High property tax states: New Jersey at 2.49% average, Illinois at 2.27% average, Connecticut at 2.14% average, New Hampshire at 2.18% average, Vermont at 1.9% average, and Texas at 1.8% average. Why this matters? On a $400,000 home, New Jersey at 2.49% equals $9,960 annually, or $830 per month. Texas at 1.8% equals $7,200 annually, or $600 per month. Florida at 0.9% equals $3,600 annually, or $300 per month. Hawaii at 0.28% equals $1,120 annually, or $93 per month. That's a $737 per month difference between New Jersey and Hawaii on the same home value. The 3. Sales tax. Tax on purchases: groceries, clothes, cars, furniture, everything you buy. Sales tax rates vary. No sales tax states: Alaska, Delaware, Montana, New Hampshire, Oregon. Low sales tax states: Hawaii at 4.35%, Wyoming at 5.22%, Wisconsin at 5.43%. High sales tax states: Louisiana at 9.55%, Tennessee at 9.55%, Arkansas at 9.48%, Washington at 9.29%, and Alabama at 9.24%. Why this matters? A family spending $50,000 annually in taxable purchases in Tennessee at 9.55% pays $4,775 in sales tax. In Oregon, at 0%, $0. The total tax burden? It's not just one tax, it's the combination. Some states have no income tax but high property or sales taxes, Texas and Tennessee. Others have high income tax but lower property tax, California relative to Texas. Understanding your total tax burden is critical to knowing where your money goes further. The no income tax advantage states. Let's start with the states that don't tax your income at all. The 9 states with 0 state income tax. Florida, the retiree and high earner paradise. Tax profile. State income tax, 0%. Property tax, 0.86% average. Sales tax, 6% state plus local, moderate. Total tax burden, low to moderate. Who benefits most? High earners. Someone making $500,000 saves $50,000 plus annually compared to California. Retirees. Social Security and retirement income not taxed. Business owners. Business income not taxed at state level. Real-world example. A couple earning $300,000 combined. California state income tax, approximately $27,000 annually. Florida state income tax, $0. Savings, $27,000 per year. On a $400,000 home, Florida property tax equals $3,440 annually. Total Florida taxes, property and sales on $50,000 spending, equals $6,440. Even with property and sales taxes, Florida's total tax burden is far lower for this couple than California, New York, or New Jersey. The catch? Florida's insurance costs, $10,000 to $20,000 annually for homeowners and flood, can offset some tax savings for coastal properties. Bottom line, Florida's zero income tax makes it exceptional for high earners and retirees, though insurance costs are a major factor.
Texas, the business magnet. Tax profile. State income tax, 0%. Property tax, 1.80% average, high. Sales tax, 6.25% state plus local, moderate. Total tax burden, moderate. Property taxes offset income tax savings. Who benefits most? High earners, 6-figure earners save substantially. Business owners, no state tax on business income. Those buying modest homes, property tax bites smaller on lower value homes. Who gets hit? Anyone with expensive homes. Property taxes are brutal on high-value properties. Real-world example. A couple earning $300,000 with a $400,000 home. Texas state income tax, $0. Texas property tax, $7,200 annually. Sales tax on $50,000 of spending, about $3,125. Total annual taxes, about $10,325. Compared to California, California state income tax, $27,000. California property tax, Prop 13 protected, $4,400. Sales tax on $50,000, $4,250. Total annual taxes, about $35,650. Texas saves this couple $25,000 plus annually, even with high property taxes. The catch, if you buy an $800,000 home in Texas, property taxes are $14,400 annually, which significantly erodes the income tax advantage. Bottom line, Texas's zero income tax is fantastic for high earners, but property taxes are a major consideration, great for those buying modestly relative to their income. Tennessee, the balanced no-tax state. Tax profile. State income tax, 0%. Property tax, 0.67% average, low. Sales tax, 9.55% average, very high, highest in the nation. Total tax burden, low to moderate. High earners, significant income tax savings, those spending less on goods. Sales tax hits high spenders more. Real-world example. A couple earning $300,000 with a $400,000 home. Tennessee state income tax, $0. Tennessee property tax, $2,680 annually. Sales tax on $50,000 of spending, about $4,775. Total annual taxes, about $7,455. This is even better than Texas and much better than any high-income tax state. The catch, high sales tax means you pay more on every purchase. If you're a high spender, this adds up. Bottom line, Tennessee offers excellent total tax burden. No income tax and low property tax offset the high sales tax. Nevada, the Western no-tax option. Tax profile. State income tax, 0%. Property tax, 0.60%, average, low. Sales tax, 8.23%, average, high. Total tax burden, low. Nevada offers a similar profile to Tennessee. No income tax, low property tax, higher sales tax. Excellent total tax burden, especially for high earners. Washington, the tech worker haven. Tax profile. State income tax, 0%. Property tax, 0.93%, average, moderate. Sales tax, 9.29%, average, very high. Total tax burden, moderate. Washington attracts tech workers, Amazon, Microsoft, specifically because of zero income tax. Six-figure tech salaries aren't taxed at state level, creating significant savings. The catch, Seattle and Bellevue real estate is very expensive, $700,000 to $800,000 plus median, so property tax bills are high in absolute dollars, even with moderate rates.
Wyoming, South Dakota, and Alaska, the wild cards. All three have zero income tax and very low property taxes. But Wyoming and South Dakota, very rural, limited job markets, harsh winters. Alaska, remote, expensive cost of living, everything shipped in, brutal winters. These work for specific people, retirees, remote workers, natural resource workers, but aren't practical for most. New Hampshire, the live free or die exception. Tax profile. State income tax, 0% on wages, but 5% on dividends or interest. Property tax at 2.18% average, very high, second highest in the nation. Sales tax, 0%. Total tax burden, moderate to high due to property taxes. New Hampshire's property taxes are crushing. On a $400,000 home, you're paying $8,720 annually. This offsets much of the income tax savings for middle-class families. Only works well for high earners with expensive homes who'd pay massive income tax elsewhere. The high-tax states. Now, let's look at the states where taxes are highest. States with the heaviest tax burdens. California, the tax leader. Tax profile. State income tax, 1 to 13.3%, highest in the nation. Property tax, 0.73% average, low due to Prop 13. Sales tax, 8.82% average, high. Total tax burden, very high for high earners, moderate for low earners. The progressive tax system. California's income tax is highly progressive. Earn $60,000, approximately 3 to 4% effective rate. Earn $150,000, approximately 7 to 8% effective rate. Earn $500,000, approximately 11 to 12% effective rate. Earn $1 million plus, approximately 13% effective rate. Real-world example. A couple earning $500,000 with an $800,000 home. California state income tax, approximately $58,000 annually. California property tax, approximately $5,840 annually. This is Prop 13 protected if owned long-term. Sales tax on $75,000 spending, approximately $6,615. Total annual taxes, approximately $70,455. Compared to Texas with same income and home, Texas state income tax, $0. Texas property tax, $14,400 annually. Sales tax on $75,000, approximately $4,688. Total annual taxes, approximately $19,088. California costs this couple $51,000 plus per year in taxes. Who gets hit hardest? High earners.
Someone making $300,000 plus pays massive state income tax. Who gets a better deal? Lower earners benefit from Prop 13 property tax protection and moderate income tax on the lower brackets. Bottom line, California is brutal for high earners. The income tax is simply unsustainable for many, which is why they're leaving for Texas, Florida, and Nevada. New York, the tri-state tax trap. Tax profile. State income tax 4 to 10.9%. NYC adds 3.078 to 3.876% for city residents. Property tax at 1.72% average, high. Sales tax 8.52% average, high. Total tax burden very high, especially for NYC residents. The NYC factor. Living in New York City means paying both state and city income tax. Combined, high earners can pay nearly 15% in state and local income tax alone. Real-world example. A couple earning $400,000 living in NYC with a $600,000 home. New York State income tax, approximately $28,000 annually. NYC income tax, approximately $14,000. Combined state and city income tax, $42,000 annually. Property tax at $10,320 annually. Sales tax on $60,000 spending, approximately $5,112. Total annual taxes, approximately $57,432. Compared to Florida with same income and home, Florida state income tax, $0. Florida property tax, approximately $5,160 annually. Sales tax on $60,000, approximately $3,600. Total annual taxes, approximately $8,760. New York costs this couple nearly $49,000 more per year in taxes. Who gets hit hardest? NYC residents earning six figures. The combined state and city income tax is devastating. Bottom line, New York's tax burden drives high earners to Florida and other no-tax states. The exodus is real and accelerating. New Jersey, property tax hell. Tax profile. State income tax 1.4 to 10.75%. Property tax at 2.49% average, highest in the nation. Sales tax 6.625%, moderate. Total tax burden extremely high. The property tax nightmare. New Jersey has the absolute highest property taxes in America. In desirable suburbs, homeowners pay $15,000 to $30,000 annually in property taxes alone. Real-world example. A couple earning $250,000 with a $500,000 home in a good suburb. NJ state income tax, approximately $12,500 annually. NJ property tax, $12,450 annually at 2.49% rate. In reality, many New Jersey towns charge 2.5 to 3%, so actual bill often $15,000 to $18,000 in high-tax towns. Sales tax on $50,000 spending, approximately $3,313. Total annual taxes, approximately $28,263 using 2.49% property tax. Realistically, approximately $34,000 plus in high-tax towns. Compared to North Carolina with same income and home, NC state income tax, $11,000 annually, 4.75% flat rate. NC property tax, $4,000 annually, 0.8% average. Sales tax on $50,000, approximately $3,450. Total annual taxes, approximately $18,450. New Jersey costs this couple $16,000 plus annually, potentially $20,000 plus in high-tax towns. Who gets hit hardest? Everyone. Even middle-class families in modest homes pay crushing property taxes. Bottom line, New Jersey's combination of high income and property taxes is unsustainable. Population exodus continues unabated.
Illinois, the pension tax state. Tax profile. State income tax 4.95% flat. Property tax 2.27% average, second highest in the nation. Sales tax 8.81% average, high. Total tax burden
very high. Illinois' property taxes rival New Jersey's. In desirable Chicago suburbs like Naperville, Evanston, Oak Park, property taxes are $15,000 to $25,000 plus annually. Real-world example. A couple earning $200,000 with a $400,000 home in a Chicago suburb. Illinois state income tax, $9,900 at 4.95% flat. Property tax, approximately $9,080 at 2.27% average. In reality, many suburbs charge higher, so $12,000 to $18,000 is common. Sales tax on $50,000 spending, approximately $4,405. Total annual taxes, approximately $23,385 using average property tax. Realistically, $30,000 plus in high-tax suburbs. Who gets hit hardest? Suburban homeowners in good school districts. The property taxes are the killer. Bottom line, Illinois' property tax burden drives retirees and families to flee to Florida, Tennessee, and Texas. Head-to-head comparisons. Let's compare specific scenarios head-to-head. Scenario 1. Young professional couple. Profile. Combined income, $150,000. Home price, $350,000. Annual spending, $50,000 taxable purchases. California versus Texas. California. State income tax, approximately $9,000. Property tax at 0.73%, $2,555. Sales tax on $50,000, $4,410. Total, $15,965 annually. Texas. State income tax, $0. Property tax at 1.8%, $6,300. Sales tax on $50,000, $3,125. Total, $9,425. Texas saves $6,540 per year. That's $545 per month. Florida versus New York. Florida. State income tax, $0. Property tax at 0.86%, $3,010. Sales tax on $50,000, $3,000. Total, $6,010 annually. New York. State income tax, approximately $8,500. Property tax at 1.72%, $6,020. Sales tax on $50,000, $4,260. Total, $18,780 annually. Florida saves $12,770 per year. That's $1,064 per month. Scenario 2. High-earning professional. Profile. Income, $500,000. Home price, $700,000. Annual spending, $100,000. Taxable purchases. California versus Florida. California. State income tax, approximately $58,000. Property tax at 0.73%, $5,110. Sales tax on $100,000, $8,820. Total, $71,930 annually. Florida. State income tax, $0. Property tax at 0.86%, $6,020. Sales tax on $100,000, $6,000. Total, $12,020 annually. Florida saves $59,910 per year. That's $5,993 per month. This is nearly $60,000 per year, enough to pay off a $700,000 mortgage in 12 years, retire 10 years earlier, build massive investment portfolio, upgrade quality of life dramatically. Texas versus New Jersey. Texas. State income tax, $0. Property tax at 1.8%, $12,600. Sales tax on $100,000, $6,250. Total, $18,850 annually.
New Jersey. State income tax, about $44,000. Property tax at 2.49% of $17,430 and often higher in practice.
Sales tax on 100K, $6,625. Total, $68,055 annually. Texas saves $49,205 per year, or $4,100 per month. Scenario 3. Retiree couple. Profile. Retirement income, $100,000. Pensions, Social Security, investments. Home, $400,000, paid off. Annual spending, $60,000, taxable purchases. Florida versus California. Florida. State income tax on retirement, $0. Property tax at 0.86%, $3,440. Sales tax on 60K, $3,600. Total, $7,040 annually. California. State income tax about $4,500. Property tax at 0.73%, $2,920. Sales tax on 60K, $5,292. Total, $12,712. Florida saves $5,672 per year. Tennessee versus New York. Tennessee. State income tax on retirement, $0. Property tax at 0.67%, $2,680. Sales tax on 60K, $5,730. Total, $8,410. New York. State income tax about $5,000. Property tax at 1.72%, $6,880. Sales tax on 60K, $5,112. Total, $16,992. Tennessee saves $8,582 per year. Over a 25-year retirement, Tennessee saves this couple $214,550. Beyond the numbers. But taxes aren't everything. Here's what else to consider. Factors beyond tax rates. What you get for your taxes. High-tax states often offer better public schools, generally, more public transportation, better funded infrastructure, more social services, cultural institutions, museums, theaters, etc. Low-tax states often have less public transportation, more reliance on cars, lower funded schools in some areas, though many exceptions, fewer social services. You have to decide, do you want to pay more in taxes for better services or pay less and handle more yourself? Quality of life factors. High-tax states, California, New York, world-class cities, cultural opportunities, job opportunities in specific industries, entertainment, finance, tech, proximity to everything. Low-tax states, more space, bigger homes for less money, lower cost of living overall, often better weather, the Sun Belt, faster-growing job markets in many cases. Healthcare costs. Some high-tax states have better healthcare systems. Some low-tax states have limited rural healthcare access. Factor this in, especially if you're older or have health issues. Insurance costs. Florida and Texas save you on income tax, but hit you with high insurance costs. Florida, $10,000 to $20,000 homeowners plus flood insurance. Texas, higher homeowners insurance due to hail, wind, tornadoes. These costs can offset some tax savings. Job market. High-tax states often have higher salaries to offset cost of living, more opportunities in specific industries. Low-tax states increasingly have growing job markets, corporate relocations bringing opportunities, lower salaries but lower cost of living. Your net purchasing power matters more than gross salary. Making your decision. So, where should you buy? Decision framework. Choose high-tax states if you're in a career only available there, entertainment, California, finance, New York, specific industries. You value what they offer, culture, diversity, universities, public transit, urban living. You're a low to moderate earner. Tax burden is much lower for middle class in California than for high earners. You have family or social ties. Can't put a price on being near loved ones. You're young and building career. Higher salaries can offset taxes while you're establishing yourself. Choose low-tax states if you're high earner. Tax savings become enormous at $200K. You're remote or flexible, can work from anywhere. You're retiring. Fixed income makes tax savings critical. You prioritize financial optimization. Building wealth faster matters more than location. You value space and affordability. Bigger house, yard, lower costs. The hybrid approach. Some people split time, work high-earning years in high-tax state, establish domicile in low-tax state once remote work or retirement allows, spend winters in Florida, summers elsewhere.
But be careful. States audit high earners who claim to have moved. You must genuinely establish domicile, driver's license, voter registration, spend 183 plus days, etc. Here are specific strategies people use. Tax optimization strategies. Strategy 1, the big move. Move from high tax to low tax state permanently. This works best for high earners, 200K plus, retirees, remote workers, entrepreneurs. Potential savings, $20,000 to $60,000 plus annually. Strategy 2, timing your move. If you have a big income year, stock options vesting, business sale, bonus, establish residency in a no-tax state before that income is realized. Example, California resident selling business for $5 million profit. California tax, approximately $665,000, 13.3%. Florida tax, $0. Potential savings, $665,000. This is why many entrepreneurs move to Florida or Texas before IPOs or sales. Strategy 3, strategic retirement. Work in high-tax state during earning years, move to low-tax state for retirement when income is fixed. Example, work in California until 60, move to Florida at retirement. $100,000 annual retirement income. California state tax, $4,500 annually. Florida state tax, $0. Over 25-year retirement, $112,500 savings. Strategy 4, the property tax play. Buy in states with low property taxes if you're buying expensive homes. $1 million in Hawaii, 0.28% property tax, $2,800 annually. Same home in New Jersey, 2.49% property tax, $24,900 annually. The difference, $22,100 annually. Strategy 5, multi-state portfolio for investors. Real estate investors diversify across states. Cash flow properties in low-tax states with landlord-friendly laws. Appreciation plays in growing markets regardless of taxes. Optimize based on investment strategy, not just personal taxes. Don't make these costly errors. Tax planning mistakes to avoid. Mistake number 1, looking only at income tax. Some people move to Texas for zero income tax, then get crushed by property taxes and realize they're not saving as much as expected. Solution, calculate total tax burden, income tax, property tax, sales tax, combined. Mistake number 2, ignoring insurance and other costs. Florida saves you on income tax, but hits you with $10,000 to $20,000 insurance. Your net savings may be less than calculated. Solution, factor in all costs of homeownership in your calculations. Mistake number 3, moving without establishing proper domicile. High earners move to Florida, but spend most time in California. California audits and claims you still owe taxes. Solution, if you move for tax reasons, genuinely move. Get driver's license, register to vote, spend 183 plus days, document everything. Mistake number 4, assuming high tax equals better services. Some high-tax states have crumbling infrastructure despite high taxes. Don't assume you get value for tax dollars. Solution, research quality of schools, roads, services in specific areas, not just the state overall. Mistake number 5, moving purely for taxes without considering fit. Someone moves to Texas for tax savings but hates the heat and misses culture. Money saved isn't worth misery. Solution, visit extensively. Make sure the location fits your lifestyle, not just your spreadsheet. Mistake number 6, timing the move wrong. Moving mid-year creates complicated part-year resident tax returns in both states. Solution, move at year-end or year start for cleaner tax treatment. The ultimate comparison chart. Let's put it all together in one view. Best and worst tax states for homeowners. Best tax states, lowest total burden. Wyoming, no income tax, low property tax, no sales tax on groceries. Tennessee, no income tax, low property tax, but high sales tax.
Florida, no income tax, moderate property tax, moderate sales tax. Nevada, no income tax, low property tax, but higher sales tax. Texas, no income tax, but high property tax offsets some savings. Worst tax states, highest total burden. New Jersey, high income tax up to 10.75%, highest property tax 2.49%, moderate sales tax. Illinois, moderate income tax 5.95%, second highest property tax 2.27%, high sales tax. California, highest income tax up to 13.3%, low property tax but high home values, high sales tax. New York, high income tax up to 10.9% plus NYC 3.876%, high property tax 1.72%, high sales tax. Connecticut, high income tax up to 6.99%, very high property tax 2.14%, moderate sales tax. Taxes matter. The difference between buying a home in a high-tax state versus a low-tax state can be $15,000, $30,000, even $60,000 plus per year for high earners. Over a lifetime, that's millions of dollars. But taxes aren't everything. You have to balance tax savings with job opportunities, quality of life, family connections, and what matters to you personally. For high earners, remote workers, retirees, and entrepreneurs, low-tax states offer massive financial advantages. For people in location-specific careers or who deeply value what high-tax states offer, the extra cost may be worth it. Run your numbers. Calculate your total tax burden. Factor in insurance and other costs. Then decide what makes sense for your situation and your priorities. Your home is your biggest financial decision. Make sure you're considering the full tax picture. If this breakdown helped you understand the tax equation, please give it a thumbs up and subscribe for more real estate financial analysis. Drop a comment. Are you in a high tax or low tax state? Would you move to save on taxes? I'd love to hear your thoughts. Thanks for watching. I'll see you in the next video.